Now it's time for hot picks. Earlier this year, regulators established clearer frameworks for spot Bitcoin and Ethereum ETFs. Our guest has 3 ETFs in this space on his radar. We're joined by Mike Philbrick, CEO of Resolve Asset Management. Mike, great to see you as ever. Start off with FBTC, Fidelity Advantage Bitcoin, trades on the TSX.
Right, and I think as you point out, Andy, these assets are moving from fringe to foundational. BlackRock's ETF in the U.S. is at $100 billion, and you're seeing BlackRock, Morgan Stanley, Fidelity starting to include these in traditional portfolios as main allocations. So we want to start looking at these types of things. And as you point out, the Fidelity Advantage Bitcoin ETF trades on the TSX, and it's a cheap way, 36 basis points in MER, for investors to get access to Bitcoin, which is the sort of the new scarce asset, the new store of wealth. And I think these scarce assets are very important in portfolios today, especially given the geopolitical uncertainty and the monetary debasement that's occurring. And scarce assets are unique. They cannot be mass produced. So if we look at oil, for example, if the price of oil goes up, more wells will be drilled, so more supply can be brought online. Whereas a scarce asset like Bitcoin, only 21 million coins will ever exist, and 95% of those coins have been mined. And the asset is not in 95% of portfolios. So unlike a produced asset, a scarce asset has to be purchased from somebody who already owns it. And that's what gives it such a diversifying opportunity in portfolios. And so that's why I think Bitcoin is worthy of inclusion, and Fidelity's Advantage Bitcoin ETF is a really good, high quality, cheap access point for investors.
You have one here that's a little more complicated. Its symbol is ETHQ, again in Toronto, and it's the 3IQ Ether Staking ETF.
Yes, and this is it is a little bit more complicated. And Ethereum has become the backbone of what's called decentralized finance or tokenization. And you're hearing a lot about tokenization today. But what does that mean? And let me try to explain. Well, first of all, in today's world, it takes days to settle transactions. If you buy a stock, it takes a couple of days. If you're sending money internationally, it also takes multiple days. And then there's several intermediaries along the way. I know if viewers have sent money internationally, all of a sudden there's these little fees that get taken along the way. And they're also subject to business hours. What tokenization does is it means these transfers can happen in seconds, 24 hours a day, 7 days a week, and cost only pennies. Now think of what that means to the total economy. Faster, cheaper transactions with less frictions across the entire financial system. This frees up capital in a way that's incredibly useful for businesses. It's exactly the kind of infrastructure upgrade finance has needed for decades. And the Ethereum ETF, the 3IQ ETF, invests in Ethereum, and it also gets a yield from staking that Ethereum. And the process of staking is simply you contributing to the system and guaranteeing those transactions, and you get a yield for that. So not only do you get exposure to the Ethereum blockchain, but you also get a yield from the staking that comes from that. And so that's why I think this particular ETF is useful. In the US, the ETFs have yet to been able to use staking. It's coming, but they can't stake yet. And so this is another one of those advancements in Canada where Canadian investors have a small advantage over those in the US.
Right. I'm just checking. I mean, yield is always can be a slippery concept. Bloomberg is not calculating a yield right now for that particular ETF.
Right. And it's about 1.2% that you're getting from the staking. In the ETF, you can't stake all of it because that does tie up the Ethereum coins. So you have to only stake a portion of that. And then the fund splits it. 75% goes to the ETF investors and 25% goes to 3IQ. But really, it helps offset the MER. So the MER, call it around 1.6, call it around 1.2 for the staking at the moment, and that yield changes. But so you're getting this for 40 basis points, which again is pretty reasonable to get access to this in a fully regulated product that trades on exchanges.
And then finally, this one trades in New York, BTGD. It's the staked 100% Bitcoin and 100% gold ETF, marrying those two very different assets.
Correct. So these assets are both scarce assets. Gold is another one of those scarce assets. It cannot be produced out of thin air, can't be printed like money. And Bitcoin is the new kid on the block, the new scarce asset. So what BTG does is it combines these two assets and it gives you both $1 of exposure to Bitcoin and $1 exposure to gold. So you get both scarce assets in one package, and then they're rebalanced so that, as gold runs ahead, that's trimmed and added to Bitcoin, and as Bitcoin runs ahead, the inverse occurs. So it combines the best of both the old world and the new world. It bridges the oldest and newest stores of value, and today they form a modern hedge against that monetary debasement and systematic risk that we've been talking about. A truly hard money portfolio. And that acts a little differently than stocks and bonds and produces a wonderful diversification impact on portfolios.
It's amazing the amount of ingenuity that's going into these things. Mike, we'd better leave it there. Thank you very much indeed.
Thanks, Andy.
Mike Philbrick, CEO of Resolve Asset Management.